Markets are officially open right now, and joining me to talk more about this eventful day is Thomas Hayes. He is the chairman and managing partner and member, well, actually managing member at Great Hill Capital. Good morning.
Good morning, Trinity. Thanks for having me today.
Absolutely. So let's lead things off with some news that just came in about an hour ago, the release of July wholesale price data. What are you taking away from the fresh data?
Well, this was phenomenal for the markets, and the markets like it. Basically, it came in at 2.2% versus 2.3% expectations year on year, and month on month, 10 basis points versus 20 basis points expectations. The interesting thing about this report, Trinity, is that 70% of the inflation was energy-based, energy products. And the other thing that we saw, which is a change from recent history, is that goods were hotter than services. The last few months, services have been very, very sticky, and goods have been in decline. So it's nice to see services come down, and the market certainly likes it. Now, the key, Trinity, is the impact that it has on expectations for rate cuts, which is what has the markets waiting with bated breath.
So more inflation data arrives tomorrow when the Bureau of Labor Statistics releases consumer price data for July. So what are you pricing out here?
Yeah, I think it's expected to bump up a little bit from, it was negative 0.1% last month for the month on month. This month it's expected to be plus 0.2% and 3% year on year. The key, though, will be, is this trend correct? And the trend that I'm talking about is expectations for probabilities of Fed cuts in September. Right now, as of this morning, just a few minutes ago, we have a 55% chance of a 50 basis point cut in September and a 45% chance of a 25 basis point cut. 0% chance of no cuts, which is a big change from just a couple of months ago. And then as of December, because of these inflation numbers that came in this morning, we have a 100% chance of 75 basis points by December, and we have 78% chance of 100 basis points by December. And the market likes it. The market's up. They just want to see confirmation tomorrow. So if you see a little uncertainty midday, just know the market's waiting for CPI tomorrow, Trinity.
Okay, and the CME FedWatch tool is forecasting 100% chance of rate cut next month. But it's also showing, yes, so it's also showing, though, a dead heat when it comes to traders expecting a 25 basis point cut or 50 basis point cut. So what do you believe that we'll see next month as this all goes down?
Yeah, it's a coin flip. The key, more than whether it's 25 or 50, is that they get started, because they can always speed up or slow down. The market has been waiting with bated breath for the Fed to finally move. We're very, very restrictive, over 200 basis points above inflation. So they have to get started, and they have to adjust as they go along and see the data. So I think that's less important for equities than knowing that they're in the game and they're not going to be too rigid in being data dependent. They have to move before we hit 2%, because if they move by the time we hit 2%, we're already in deflation, and that's a much harder problem to solve.
And from your vantage point, do you think that the Fed waited too long to begin cutting rates?
Yes, but they'll get away with it.
Well, I mean, that was a short and sweet answer.
Yeah.
And we've
go
go ahead.
Go ahead. Yeah, they certainly waited too long, but they will get away with it so long as they move in September. They have the Jackson Hole meeting as an opportunity to convey some dovishness and to signal for September, which should hold things together until they finally start the cutting process. Just in the nick of time is really what it's going to come down to.
And, we've also seen a lot of heightened amount of market volatility over the past week. So what are you advising investors to do in the near term amid a flurry of economic headlines?
Yeah, so it's definitely created some bargain opportunities. I think we're going to hold up here into the first cut. We may see some volatility in the fall after that first cut and before the election. But on balance, look, earnings are strong, 10.8% year on year, with 78% of the companies reporting. That compares to analysts expected 8.9% earnings growth. To have 10.8% is really, really good for Q2. If you look at the GDP now, we're still growing at 2.9% GDP growth. It's a big deal. And then estimates for next year have not only held up, but they've gone up in the last few weeks, up 1%. since July 1st, still $279 for the S&P next year, which is 15.2% earnings growth. So Trinity, when people say the multiples are too high, just say compared to what? Because the earnings growth is going to be 15.2%. So provided the Fed does the right thing and starts that process just in the nick of time, I think we're going to hold up. I think we're going to do fine. And the one thing everyone's worried about, the consumer, don't bet against the consumer so long as they have a job. And so long as the Fed starts this cutting process, I think we're going to be able to hold the labor market together.
And earlier we dove into wholesale prices and consumer prices, but there are also a lot of events that are unfolding too, like retail sales data on Thursday and housing starts data on Friday, for example. So what do you feel can drive the markets later in the week?
Yeah, look, I think the short-term numbers, everyone knows the consumer's a little bit weak, a little bit nervous, and part of that has to do with affordability of housing, which is going to improve as the Fed starts to cut rates. Housing starts, you're going to see, they're not going to be great until the Fed starts to cut rates. But once that happens and the consumer has a light at the end of the tunnel, knowing the Fed is on their side versus, continuing to gut punch them, I think that things will move forward in the way that everyone expects, and we'll be able to see earnings reaccelerate. Margins are accelerating, so things are holding on, but the Fed needs to act fast. And as far as the data this week, it's short-term noise in the scheme of a long-term strong economy.
A lot of important points right there. Thank you so much, Thomas, for joining us.
Thank you, Trinity.